Hey, y'all. Hold on 1 second. Hold on, y'all. We're gonna get started. I don't know why I don't want to connect. I don't like me right now. Alright, whatever. My earpods tired, y'all. Okay, give me a second. We're gonna get started in a minute. And excuse me if I'm low. I want to have my AirPods on, but I don't want to be too loud because the baby is asleep. And let's keep him asleep. All right. Devices don't know. Yay. See, we just had to try one more time. Okay, I hope you guys are able to hear me. Nope. Let's close out some of this stuff. Alright, so today, let me see if I can remove this. Is it my headphones? Like, what is going on? Or is it my laptop? It's always something. Well, whatever. Let's just make this work. Alright, so today we are getting started. And we are going to go over the Engulfing bar candlestick and the Doji candlestick. Just to recap from last week, we went over, so the book that we are going over is called the Candlestick Trading Bible. And I actually did a Google search. If you just type in the Candlestick Trading Bible, you can, it's a free PDF that's out there. That you can download it. You do not have to buy the book, but if you want the book, you can get the book. Hey, whatever floats your boat. My thing not even showing up no more. I don't care. As long as y'all can still see me, we still good. We global. Alright, so last week we went over the introduction of the book, overview, history of the candlesticks, and what is a candlestick. So today we're going to go over the candlestick patterns, which is we're only going to do two today: the Engulfing bar candlestick and the Doji candlestick pattern. These two you will definitely see a lot on your charts. So I'm glad that these are the first two. So let's jump into page 15. Okay. Alright, so the Engulfing candlestick pattern, as it states, is in the title, is formed when it fully engulfs the previous candle. The engulfing bar can engulf more than one previous candle, but to be considered an engulfing bar, at least one candle must be fully consumed. Okay? Okay, good. This is a good pair. Euro USD. This is a base pair, and we'll go over the base pairs. But some of the base pairs, let me just get this out the way so we can type. I can type where you go. So they're actually called major pairs, and look at this freaking headphones. Let's just take them out. Alright, so I'm so sorry. So major pairs. This is just gonna be a side note so you guys can be able to go over, and let me actually, I'm gonna create a new list, and we're gonna put alright. Okay, duh, I know. So your major pairs that you have is and you can, and if you don't know, you can always just type in Forex major pairs. These are some easy pairs to be able to trade. Okay, so we have Euro USD, gonna show me what I want. Okay, great. So we got Euro USD, there is a GBP USD, there is AUD USD, which is the Australian dollar and the United States dollar. We have the USD CAD, the United States dollar, and the Canadian dollar. I guess USCHL. Alright, Swiss franc, EU, yeah, Jappy, and NZD. Okay. Alright, so USD, Swiss franc, and then USD JPY, of course. And we have the New Zealand NZD USD, which is the New Zealand dollar. Alright, but I think the most easiest pair to trade would be your EU because of the price action. I'll just tell you more about it. It's just easy to read, basically. So let me actually put this here and type it up again for you guys, so you can have it. So your major pairs, we have EU, which is Euro, USD, we have, it may say, they say AU, and they may say, I don't know, sometimes they have nicknames, but, and I don't know the nicknames, don't kill me. AD, USD, and then we have NU, which is your New Zealand dollar and United States dollar. We have USD, UJ, which is USD JPY. I'm so sorry, let me go, I don't want to skip. We have GU, which is the Great Britain pound and Great British pound and United States dollar. UJ, United States dollar, and Japanese yen. I don't know if it's I don't know if that's a nickname for it, but United States dollar and the Swiss franc. What am I missing? USD CAD or UCAD, which is USD, and the Canadian dollar. 7. Okay. So 7 pairs. Definitely, this is a good beginner pair. I just want to stress that it's a good beginner pair. They all good beginner pairs, but this one is definitely good beginner pair. All right. So the Candlestick Bible. Now let's just go back in time. Well, I just want to show you first. So in the Candlestick Bible, it talks about. Let me close this. It's a good book I'm reading on trading. Yes. Alright, so it says the engulfing bar as it states is in its title when it fully engulfs the previous candle. So, and this is a good example here. This is called a bullish. Let me let's stretch it out here for you. this green candle here that you guys see, my arrows. Okay, this is a bullish engulfing because it's going up. That's it, bullish. The bulls goes up and the bears go down. This is a bullish engulfing candle, and it engulfs this previous candle, and it also actually engulfs this previous candle as well. But this is the previous candle that they're talking about. And they're saying, and it also says that you can. It also states that the engulfing bar can engulf more than the previous candle, but is considered an engulfing bar. But to be considered an engulfing bar, at least one candle must be fully consumed. Just definitely ate this up, okay? Ate that for breakfast, lunch, and dinner. All right. All right. So what does this mean? Alright, so they give us 2 examples. The bearish engulfing is one of the most important candlestick patterns. Okay. This candlestick pattern consists of 2 bodies. The first body is smaller than the second one. In other words, the second body engulfs the previous one. And then it has an illustration. So for thinking that this is bearish, right? It's gonna go down because our bears go down. It's actually engulfing this previous candle here. Don't worry about this opening price and the closing price. We'll get to that later. I just want you to see the illustration. Okay, and it says this is how a bearish engulfing pattern looks. Like on your charts, this candlestick pattern gives us valuable information about bulls and bears in the market. Okay. Alright. It says, in case of a bearish engulfing bar, this pattern tells us that sellers are in control of the market. Okay. Meaning we should be selling. When this pattern occurs at the end of an uptrend, this indicates that buyers are engulfed by sellers, which signals a trend reversal. All right, and then it has an example below. So at the top of this uptrend, because at first it was going up, it stopped, and now we have this bearish engulfing because it engulfs this previous candle here, and she's going down. All right. And since, as you can see, when this price action pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market and sellers are trying to push the market to go down. You can't trade any bearish candlestick pattern you find on your chart. You will need other technical tools to confirm your entry. So basically what they're saying is you just don't want to trade this by itself. You want to have different confirmations to validate the reason why you're going to be selling. Okay, so let's take a look at this in the market and see if we find some bearish engulfing patterns. Yeah, I like this. Okay, this is a good one, kinda. Here is, I want to find a bigger one, but you have a bearish engulfing here, and it goes this previous candle here. We have another bearish engulfing here because it engulfs this previous candle. So this is real good. Here is another bearish engulfing here because it engulfs this previous candle. Alright, and let's see if we can find one at the top of our uptrend. Okay. Bearish engulfing. She goes down. Yeah. I'm going to spread that out so you can see it a little bit more. Okay, here's another one. Bearish engulfing because it engulfs this previous candle and she goes down. This is a huge engulfing candle here. She engulfs this. She goes down. Me and my little sounds. Alright, so we're getting the gist of it. Bearish engulfing, she goes down. Another bearish engulfing, she goes down. Looks like she came back up and made a bearish engulfing, and she continues down. Now also they are saying that you want to use different confluences to back up your reasoning. Okay, here's another one. Bearish engulfing because it engulfs this. It's a small one here, but it engulfs this previous candle. Okay, let's find them again. Bearish engulfing engulfs this previous candle. Alright, and she's just going down. So it looks like for EU, as you can see. Let me see if I can make my watermark a little bit bigger. Oh, I can't. Never mind. Alright, so we have some examples of some bearish engulfing candles. Alright, so we will talk about this in details in the next chapters as far as how you can confirm, you will need other technical tools to confirm your entry. So we're going to talk about that later in the chapters. Right now, I just want you to open your charts and try to identify all bearish candlestick patterns that you find. So we did find some in EU. We actually found a couple. Okay, good couple of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And if you guys, you can try to just find these entries. Find these candlesticks, right? You just train in your mind. Here's another one. I know it's kind of scrunched up. Right, and goes this previous candle, she goes down. Don't worry about her going down. I just want you to identify those bearish engulfings. Okay. All right. Okay, alright, next we have the bullish engulfing bar candle. So the bullish engulfing bar consists of two candlesticks. The first one is the small body, and the second one is the engulfing candle. And it has the illustration. We have that small candle here, and we have this big bullish engulfing candle as well. Right now, don't worry about the closing price or the opening price. Just more, I want you to look at these candles. Alright, it says the bullish engulfing bar pattern tells us that the market is no longer under control of sellers, and buyers will take control of the market. When the bullish engulfing candle forms in the contents of an uptrend, it indicates a continuation signal. When a bullish engulfing candle forms at the end of a downtrend, the reversal is much more powerful as it represents a capitalization bottom. See the example below. So we were in a downtrend here. We have that bullish engulfing, and she goes up. All right. It says the example above showed me. Let me scoot this out for us. Okay, it says the example above shows us clearly how the market changes direction after the formation of a bullish engulfing bar. Okay, the smaller body that represents the selling power was covered by the second body that represents the buyer power. The color of the bodies is not important. This is what I want you to know. The color of the bodies is not important. What is important is that the smaller one is totally engulfed by the second candlestick. Okay? These are some key things that I want you to remember. Okay. Don't try to trade the market using this price action setup alone, because you will need other factors of confluence to decide whether the pattern is worth trading or not. I will talk about this in the next chapters. I won't talk about it. We're reading. What I want you to do now is to get the skills of identifying bearish and bullish engulfing bars on your chart. This is the most important step for the moment. Okay? Alright, so let's go back to our charts again. And let's see if we can find some bullish engulfing candles. So this is just something that we actually... And let me change the color on this. Let's just use green. Alright, so we have a bullish engulfing candle here. Here is another one. And I'm glad I'm actually looking at this, because I'm looking at my charts now. And I'm not liking the way. That's a side note. Okay, sorry about that. Being that this has been a downtrend, it's a little hard to find some, so we may have to go back in time. Okay, let's see here. Oh yeah, this is lovely. Here is a bullish engulfing candle here. There's one. It went up a little bit though. Let's see if we find another one. And the website that I'm using to mark up my charts is it's TradingView. You can go to tradingview.com. They have a free version, but if you are really serious, you can just get like the pro version. Here's a bullish engulfing. But I also recommend that you don't go crazy trying to spend your money I want you to learn first. You can use the free version. Just have a lot of pop-ups and ads. So here is actually a great example. It says the color does not matter, right? Let's go back to that. It says the color of the bodies is not important. What's important is the smaller one is totally engulfed by the second candlestick. Okay? Totally engulfed by that second candlestick. That's what's happening here. Doesn't matter the colors. You just know what they do. There's a smaller one. I wouldn't consider that, but that's a smaller one. Okay, here's one. And let's see if we can find maybe two more. It looks like she has been raining because I don't really like that. She has been selling for quite a long time. Okay. Here is one. And I like this because it starts. And this one is at the bottom of a downtrend. Here. Downtrend, bullish engulfing. She goes up and she just keeps going up. She keeps going up here. Okay, so we spotted out some bearish and some bullish engulfing candlesticks. Bullish goes up, bearish goes down. bulls goes up, and then our bears go down. Oh wait, hold on. I like this one. I like this one too. There's two more. This completely engulfs that. That's from a news candle, December 3rd, probably NFP. We'll talk about more of that later. Another bullish engulfing candlestick. Let me space it out so you guys can see. Alright, and here's one more. Okay. So it's that easy, y'all, to find. That's why I said that this book is like, this book really needs to be a Bible. This tells us what's happening in the market, what's going to happen. But we do also want to have different other confluence to tie into what we're thinking and that the market is going to go. Okay. So let's continue. All right. So next we're going to talk about the Doji candlestick pattern. Okay. Let me space this out some so you can read it. It says the Doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means that there is. Did we go over the open and close? I believe so in the first one. But if not, we can go over at the end of this call. There is equality and decision between buyers and sellers. There is no one in control of the market. And then it has, see the example below. Alright, highest price, lowest price, and they're closing and opening at the same. Looks like a little cross, right? It's indecision. We don't know. Where's the bears telling us to do? What is the bulls telling us to do? It's an indecision. We don't know. And it says, as you can see, the opening price is the same as the closing price, opening and the closing. This signal means that the market didn't decide which direction will take. When this pattern occurs in an uptrend or downtrend, it indicates the market is likely to reverse. Okay. And then it says, see another example below to learn more. Okay. And here's our example that we have here. Looks like it was an uptrend, indecision, and then we have a downtrend. Okay, as you see this I just want you to as you can see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction will take. And then it says, when this pattern occurs in an uptrend or downtrend, it indicates that the market is likely to reverse. That doesn't mean that it's going to reverse. It just means that it's likely to reverse. Okay. It says the chart above shows how the market changed direction after the formation of the Doji candlestick. Okay, the market was trending up. That means that the buyers were in control of the market. The formation of the Doji candlestick indicates that the buyers are unable to keep price higher, and sellers push price back to the opening price. Okay. Oh well, basically in here. Sorry. This is a clear indication that the trend reversal is likely to happen. Remember, always that a doji indicates indecision in the market, and you will often find it during periods of resting after big moves higher or lower. When it is found at the bottom or the top of a trend, it is considered as a sign that a prior trend is losing strength. These are good pinpoints. So if you're already riding that trend, it's time to take profits. It can also be used as an entry signal if it's combined with other technical analysis. So either you take your money that you have, or you're getting in. Okay. Alright, so let's see if we can find some dojis in the market. And they said it's the best at an uptrend or a downtrend, right? So let's find some dojis. Here's a gray doji here. And we're going to mark that yellow because he had that indecision. Here's the doji. It's this red candle here. Let's see if we can find. Here's one. It's a green candle. And don't worry about the candle colors. Just worry about what is showing us. Here's another doji. And you'll see these dojis a lot because it's one of the most powerful, right? Uptrend, doji comes. Then that bearish engulfing. Man, we know we about to sell. Okay? But we gotta use different, can't just use these candlesticks alone, guys. We want to use different technical analysis, your technical analysis to confirm. And I'm just pointing out some of them. It's this one here. Look, and it looks like a cross. Oh my gosh, this is beautiful. This is beautiful here. Downtrend, doji, uptrend. Okay. Indecision. But we don't know what's happening, right? This is a doji, but this is another form of a doji. We're gonna get to that name later, but this is a doji. Here's a doji here. Downtrend, small little downtrend, goes up for a little bit. Oh, look. Doji. Downtrend, stop. All right, come on. Up. Well, that's, and then also it's a bullish engulfing that follow right along it as well. So let's find a couple more. And I want to try to get good ones for you guys to see in the market. Here's one. Downtrend, doji, uptrend. Here's another one. You'll find these a lot. It's best to have them at a downtrend or the top of an uptrend. Alright, because it said it was going to go, it's probably indecision or likely a trend reversal. Let's just find a couple more. Here's the beautiful one here. And here is one here. This red candle. And let's just can do this one here. It's just a small red doji candle. Okay, it sold off for a little bit, or she went up. That sold was not, it was a retracement, but we'll talk about that more in the later books. Alright, so we have some examples here, and I'm so sorry, that was a little, I need to stop saying sorry too. I'm trying to get that on my vocabulary because I'm not sorry, I'm just learning my lesson. So we have some examples here. We have our bearish engulfings, letting us know we're going down, and then we have our bullish engulfings. Okay, what is price telling us? Price is telling us either we're gonna go up or we're gonna go down. These were the true movements of the market here. This one is definitely a great entry. So either you're getting in, you're taking profit, right? I'm going up, I'm buying, I get this doji, let me get out. Yes, it did come up a little bit more, but we caught all of this, right? Now we have that bearish engulfing that came first, and then that doji came. Hey, we may be selling. And what did she do? She sold. But we'll talk about how to combine those two. I'm just giving you an actual visual example of what's actually happening, what you can be able to read. You want to use these with different technical analysis as well, guys. Don't just go trading off. Don't go trading off the candlesticks. And here's why. I just want to go on a lower time frame. You're gonna see these a lot. Okay, I don't even know where we had our other ones. You see, you're gonna see these a lot. So you gotta be careful, especially on those lower time frames. Doji, because it could be tricky. Doji. Look at all this doji. So you gotta be very careful. All right, and so we went over the doji candlestick. We have went over our bullish and our bearish engulfing candlesticks. I just wanted to go back to the open and the closing price because I don't think we went over that, but if we didn't, let's talk about it. Okay. So using this count. Okay, gotcha. Alright, so what is a candlestick? So Japanese candlesticks are formed using open, high, low, and close of chosen time frames. So here is a great example. Alright, upper shadow. This was a high because this is like our green color, right? Close, open, low, lower shadow. Lower shadows, which is these little wicks, these little skinny things. They're shadows. They're not the actual move. Well, the market did move, but that's not the actual true moving of the market. This real body actually. This is what we want to take a look at. We got our high, our highs, and then we have our lows. Your highs and your lows are always going to be the same. Your upper shadows and your lower shadows will always be the same. But the difference is the open and the close. Being that this is like a bullish candle, a green candle, it opens here and it went up. Okay? I wish I could write on this. Can I write on this? No. I'm not buying a retrial. Oh yes, that worked. Alright, so it went up. Okay, and then we have I wish I had some tools or something. I'm not really good at this, but whatever. And then we have our bearish, which is the red color that you see. That's gonna go down. Okay, let's go down. All right, and then bullish goes up. No, I didn't do it. Okay, open here, goes up, and she closed out here. She did get all the way up to this high, but she closed here. Some of the sellers pushed that back down. Okay, then we have the seller. She opened here and she went down and she closed here. She did get to this. She did come all the way down here, but when market closed, or when that candle closed, it closed out right here. Okay. All right, so it says if the close is above the open, we can say that the candlestick is bullish. Okay, which means that the market is rising in this in this period of time. Bullish candlesticks are always displayed as white candlesticks. That's not the case. As we know, you can be able in TradingView, well, that's based off the book, but in TradingView you can be able to customize these colors the way that you want to. Don't, like they said, don't focus on the color, focus on what price is telling us. Where's my settings? Okay, there you go. Symbols. So it can be, I don't know, purple or something. Alright. It can be different colors. Okay. Oh, sorry. Alright, so let's finish. The most trading platform use white color to refer to bullish candlesticks, but here it goes, guys. The color doesn't matter. You can choose whatever color you want. I did not just say that out of my head. The book tells us. The most important is the open price and the close price. Okay? Open price, close price. Open price, close price. Okay? This is the most important thing to know. Alright, if the close is below the open, we can say that the candlestick is bearish, which indicates that the market is failing in this session. Bearish candles are always displayed as black candles, but this is not a rule. Don't have to have white or black candles. You can use different colors. Okay, and when you open up TradingView, they may be red and green, I believe. You can find different colors. You can find different colors used to differentiate between bullish and bearish candlesticks. The filled part of the candlestick is called the real body. Okay, these big old block things here. The thin lines poking above and below the body are called shadows. So as we seen, there's our shadows here. Lower shadows, upper shadows, and real bodies. Okay, and I want you guys to actually highlight this so you can see. So you can always go back to them. Highlight your things that you think is important that may help you in the long run. Okay, the top of the upper shadow. Yes. The top of the upper shadow is the high. The bottom of the lower shadow is the low. So they have candlestick body sizes. Candlesticks have different body sizes, right? We had that small one. We got that engulfing. A small one and engulfing. Okay. Long bodies refer to strong buying or selling pressure. If there is a candlestick in which the close is above the open with the long body, this indicates that buyers are stronger and they are taking control of the market during that period. Okay, long bodies refer to strong buying or selling pressure. As we seen those engulfing candles that we went over, it was letting us know if we're selling or if we're buying. Okay. Conversely, if there is a bearish candlestick in which the open is above the close with the long body, this means that the selling pressure controls the market during this chosen time frame. Short and small bodies indicate a little buying or selling activity. So the small ones have little buying selling activity. These longer ones means that it's some pressure. They putting pressure on it. Okay. Candlestick shadows or the tails or wicks or whatever you call them. The upper and lower shadow gives us important information about the trading session. Upper shadows signify the session high. The lower shadows signify the session's low. Candlesticks with long shadows show that trading action occurred well past the open and close. So if you go back to this example here, price It opens here, it went up here, it even came down here from the opening, right? It went down from the open, but it ended up closing out bullish here. Okay. If a candlestick has a longer upper shadow and short lower shadow, this means that buyers flex their muscles and bid price higher. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. If a Japanese candlestick has a long lower shadow and short upper shadow, this means that sellers splashed their washboard abs and forced price lower. Okay. They came down, but they didn't. But for one reason, another buyer came in and drove prices back to the end of the session, back near its open price. So basically, they're saying if it was a long upper shadow, price came all the way up here, but our sellers pushed us down here. If we have a long lower shadow, that means that the buyers pushed price all the way. Oh, I'm sorry. First it went down. The sellers thought they was doing something, but then that buyer came, that big old buy came, and it pushed it all the way back up here. Alright, candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups, as research has confirmed that candlestick patterns have a high predictive value and can produce positive results. Okay? It's not me who's telling you that you can make money. It's the book that's telling you. And it's telling you how you can be able to. I personally trade candlestick patterns for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading methods with no results. I'm not going to introduce you to a holy grail this trading system works, but be prepared to lose some trades. Losing is part of this game. I don't know if they heard that or not. What color should we use? Losing is a part of this game. If you are looking for a 100% winning system, I highly recommend you to stop trading and go look for another business. Even in business, you take losses. Even in life, you take losses. Don't think that everything is going to be all going your way. Losses happens, but the good thing is we come back stronger. We learn our losses and we come back stronger. We learn from our losses and we come back stronger. Okay, candlestick patterns are the language of the market. Imagine you are living in a foreign country and you don't speak the language. How could you live if you can't even say a word? It's tough, right? The same thing when it comes to trading. If you know how to read candlestick patterns the right way, you will be able to understand what these patterns tell you about the market dynamics and the trader's behavior. This skill will help you better enter and exit the market in the right time. In other words, this will help you act differently in the market and make money following the smart guy's footprints. The candlestick patterns that I'm going to show you here are the most important patterns that you will find in the market. In this chapter, I'm not going to show how you trade them because this will be explained in details in the next chapters. What I want you to do is to focus on the anatomy of the pattern and the psychology behind its formation, because this will help you get the skill of identifying easily any pattern you find in the market and understand what it tells you to do next. If you can get this skill, you will be ready to understand and master the trading strategies and tactics that I'm going to teach you in the next chapters. Alright, and then that's when the engulfing counters come into play. Alright, so let's go back to our notes, right? We have now gone on over the introduction, the overview, history of the candlesticks, what is a candlesticks, and we have talked about the engulfing bar candlesticks and the Doji. I need to put this as another color. And and the Doji candlestick patterns. That's gonna make this great too. Okay. Then we're gonna talk about those two different types of those Doji patterns, right? Which is the dragonfly Doji pattern and the great stone Doji pattern. And then if we have more time, I do want to go over the morning and evening star candlestick patterns. They're only a couple pages, but we'll see. Alright, so this is what we are going to follow up on next week. What I want you guys to do, which would be your homework, is I want you to just do what I did in this video. Let's go look for some bearish engulfings. Let's look for some bullish engulfings. Now let's see if we can find some Doji candlesticks. Maybe just 10 of each. You don't have to send it to me if you don't want to. If you do, hey, all for it. I'm here to help. But I just want you to get a real feel of the market. I want you to get a real feel. Get your eyes trained to seeing these candlesticks so that you can be able to recognize them. Don't worry about what it does. Just look at, because we can always go back to our book and say, okay, this is what it does. This is what it means. You'll start to know the psychology behind them. But I do want you to first train your eyes to see these things. This is what all you're going to be seeing. That's all. That's all. Alright. So you have your homework. You have your pairs, which is your major pairs. And I want you to go over, you can choose any of these pairs here. I don't want you to go look at anything else. Okay? I want you to go only over these 7, because these are your major pairs. These will be one of the pairs that you may start off trading. I recommend if you start trading these pairs to get to know how Forex is. It's EU. Maybe your baby, because you can actually see. Alright, and you can know, and well, I'm not for sure how the free version is anymore, but I know you can go back into the market some. Go back as far as the free version allows you to in Trading View. But yeah, you guys have a great night. I'm gonna try to get some sleep while I can before the baby wakes up. Have a great day.